Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 20th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. There's actually quite a bit of economic data coming out this week. We've got PPI, CPI, which is Producer Price Index, and the Consumer Price Index. So we got a few of those and some PMIs, which is Purchasing Managers Indexes. Those come out later in the week. We also have crude oil inventories later on in the week. Today being a Monday, not a whole lot going on. And because we just had the FOMC, a lot of FOMC members will be speaking. Today we have Evans speaking later on this afternoon. So could be a lot of information to take in this week on what the economic outlook is looking like and what these Fed governors are thinking. But on to the overall markets. We've got crude oil right now down about 42 cents on the day, trading below $49, which it was kind of stuck on there for a while. I still see it going down to this $45 or $45 a barrel, 45.80-ish. We got to get below this 38 fib level though. That is going to act as support, but this is acting as a magnet. It really wants to draw down there. Then on to gold futures. They're up a little bit on the day, about $2, but pushing up against that 200-day moving average, which is going to be a pretty strong line to get through. A very good resistance level on the way up will act as support on the way down, but right now it's going to be acting as resistance. Then we have the bonds up about a half a point on the day. Nothing to see here. Bonds may have gotten a little bit overextended to the downside on that push, but pretty much pricing in the rate hikes. Dow Jones Industrial Average up about 25 points, still trudging along right above that 9-day moving average, which shows upward momentum. It shows that the bulls are really kind of in control, at least for the short term, and Dow Jones is pushing higher. They all could be being brought up by the Nasdaq. Now remember, this Nasdaq high, all-time high right there, was printed overnight. So the day session is really going to want to try and print that before we start seeing a whole lot of downside or any kind of market correction. I think that that's going to be something that is taken care of before you see a market correction. Then on to the mini S&Ps, they're down on the day despite the fact that the Dow and the Nasdaq are up, but they're only down a couple of points anyway. But very comfortable in this range right now, and probably waiting to see if the Nasdaq is going to print its overnight or that all-time high. This is the 30-minute breakdown on the E-mini S&P chart, 10 days back basically, and we're really pushing this. Started up, we opened out of balance, but the market has tried to trade into the previous day's range. On that, when the rule is when it goes inside of the previous day's range in two 30-minute bars, that it is going to want to at least go back and test this point of control. Not doing that right now. I thought about doing it, but this second time in there just started looking like it was not being traded very much and wasn't a lot of participation. So I just thought that I'd stay away from that one. And the overall market has come back off to the daily point of control. But the reason why I didn't is this value area high for the time just seemed to be a little bit much for it to get through. So I decided to stay away from that. Then on to a couple of things that I've done with XLU, did today. And XLU, I just decided since we came back into this value area, it is going to want to go down and trade towards that point of control. Whether or not it gets there is yet to be seen, but anytime it gets down below here, it's a pretty good high probability trade that it's going to come and have a bit of a correction. So with XLU, which is the Spider ETF for the utilities, I went into the April and sold the 50 puts and then bought the 52 puts, right in line with my rules that I go through in these webinars, and I paid 98 cents for that, so less than 50% the width of my spread, and I was able to synthetically sell XLU a little bit higher than we are actually trading right now. I sold it at 50.98 and we were trading around 50.93 at the time. So overall market's coming off in there and looking to hopefully trade down to my 50 handle. Then on to gold. These are some trades that I just let expire, worthless. In gold, I had on the March, and these were on for quite some time, and had sold the 110 puts and bought the 113 puts. So never really got down there, got down to the 114 handle, and then got that big, huge spike up right back to the point of control. Thought it was really going to come down here and test this value area low. Just never really happened. So that one I just ended up letting expire, worthless. Didn't really work out my way that way. So, and then on to GM. GM, I had another trade on there for quite some time and had on the March 35 puts. Now I did get the directionality right, but at the end of the day, never got back down within that value area. It started getting a little thin up here, so I figured it was a good time to put on some negative deltas, and just came shy of being able to get to my mark. So those two expired, worthless on Friday. So that's all I've got for you guys today, but I'm starting to look at a lot of correlated products or and even non-correlated products to try and take advantage of that and how we can create some strategies around that. I've done webinars for it in the past and just haven't really seen any setups happening, but I think we're going to be able to see some in some of the consumer staples. So I'm going to try and do a webinar on that to take advantage of some of those consumer staples. So check out at protraderstrategies.com. That's all I got for you guys today, other than if you can't take that, take it easy.